Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Sensex and the Nifty hit another record high as bulls entered deep into uncharted waters. The Sensex gains nearly 500 points, the Nifty up almost 150. A CNBC-TV18 News breakers confirmed the Kirit Parikh panel bats for liberalization of the gas sector by 2027, recommends a reduction in price until then, with annual escalation for gas from existing fields. Shares of gas distribution companies rise in trade. The government is set to release the second quarter GDP data at 5:30 p.m. CNBC-TV18 poll expects growth to slow to 6.4%, but agri and services growth is likely to remain strong. The government is hoping to bring fiscal deficit closer to 6% instead of the 6.4% budget target, thanks to strong revenue and better expenditure management. Sources say the finance ministry has reiterated the need to end the free food grain scheme, which was extended to December this year. The government put subsidies for electric vehicles worth more than 500 crore rupees on hold after recent incidents of fire. Sources say the government audit shows violations of localization and quality norms. Some EV makers could be asked to return the subsidy already claimed. That's an exclusive. The Enforcement Directorate is probing Ashok Leyland for allegedly selling vehicles with lower emission standards in defiance of a Supreme Court order. Ashok Leyland says it's provided all documents to the authorities in the probe. It's against a third-party scrap customer and not the company. India, Vietnam, Philippines and Thailand are emerging as strong backups for those diversifying their supply chain, says John Pearson, the global CEO of logistics giant DHL Express, but also cautions against overestimating the shift out of China. That's an exclusive. Violent protests flare up once again in parts of southern China, which are under lockdown. Videos on social media show demonstrators clashing with riot police in hazmat suits in a key manufacturing hub. Debt-ridden Reliance Capital receives 8 binding bids under the bankruptcy proceedings. 5 bidders, including Piramal, Hinduja, Oaktree, Torrent Group and others, want to acquire the entire company. 3 bidders are eyeing parts of the company. Anuljit Singh could be looking to monetize his stake in Max Financial. Sources say Singh is expecting a valuation of 27,000 crore rupees. Max Financial says Anuljit Singh remains engaged and invested in the company, and the report is untrue. Bilkis Banu moves the Supreme Court challenging the release of 11 men convicted of gang raping her and killing her family. In the 2002 Gujarat riots, the convicts were freed by the Gujarat government on the 15th of August under a past remission policy, sparking nationwide outrage. Well, the Sensex and the Nifty bank hitting another record high. Bulls clearly in deep, uncharted waters. A last-hour recovery led by the MSCI inflows helping the markets end at the day's high. The Sensex gained nearly 500 points, while the Nifty gained 150 points. FMCG, auto, metal stocks leading from the front, while PSU banks underperformed today. Prashant is standing by to wrap up the day's trading action. Prashant, another new peak being scaled for our markets.
A powerful move emerging in the last 30 minutes of trade. I mean, for the bulk of the day, the Nifty was kind of biding time with about a 30-40 odd point gain. But the real move came after 3 o'clock, and it was a very powerful, strong close, all-time highs coming through for the benchmark indices once again. Banks, which did not participate for the bulk of the day, starting 3 p.m. participated as well. The Nifty bank ending about 0.6% higher. Broader markets had it even better. The mid-cap index recouped all of its yesterday's 0.75% loss, added more on top, and the small-cap index did not do badly either. Nifty gains coming through in lots of names. Mahindra & Mahindra was the top gainer with a 4% move. Eicher, another one from the auto space. The old economy, Hindalco, Grasim, Ultratech were some of the others which did pretty well as well. Broader market gains, and there were quite a few. Adani Transmission, Adani Green, both up strongly. Shriram Transport was surging, especially in the last 30-40 minutes of trade. There were names like Hudco, Kalyan Jewelers, Lemon Tree was up strongly. There was also, of course, the MSCI impact. Lots of stocks were supposed to be included and money flowed in. This is passive money, and you saw that impact today. Bajaj Holdings, sharp surge. Varun Beverages, a case in point, and Indian Hotels, which moved relatively lesser, but did move towards close as well. So all in all, a pretty good, powerful market, especially so because of the last 30 minutes of trade. I mean, we'll track what happens to global markets, although the impact here on a day-on-day basis irrespective of what happens in the US, has not been felt as much. But today is particularly important because we've got the Fed chair, Jerome Powell, who will be speaking. His commentary will be important. He's moved markets before, one way or the other, and we'll see what he has to say when we come back tomorrow.
Right. Prashant, many thanks for joining us. The market scaling new highs, and of course, we will be tracking the commentary from the Fed. But in the commodity market, oil prices gained as US crude inventories were seen falling. However, concerns that the OPEC Plus would leave policy unchanged in its upcoming meeting limited the gains. NYMEX is around the $79 per barrel mark, while Brent is currently at the $84 per barrel mark. The government-appointed committee to review gas prices has now submitted its report to the Oil Ministry. The panel, led by Kirit Parikh, has recommended liberalisation of gas prices from 2027. But until then, he has proposed a price band of $4 to $6.5 with an annual escalation in price. Parikh spoke exclusively to CNBC-TV18's Parikshit Luthra soon after the report was submitted. Here are his comments, followed by Sonal Butra's analysis on the report and its implications for gas stocks.
What we have suggested is that there should be a floor of $4 per MMBTU. This is to cover the marginal cost of production of OIL and ONGC. And we have also put a ceiling price of $6.5 per MMBTU, which ceiling price will be gradually raised every year by about $0.5 per MMBTU.
When you speak about liberalization of gas prices, you speak about a 1st January 2027 timeline. Now, what?
That's for APM.
That's for APM. Yeah. And January 2026 is for?
Other gas.
For other gas fields, right, like difficult gas fields.
Now, every $2 per MMBTU decline in gas costs for these companies would give them a leeway to actually cut prices for CNG and the domestic segment as well. In the CNG segment, it could have an impact of 7.5 to 8 rupees per kg. IGL gets around 87% of its volumes coming in from CNG and domestic gas. That is the PNG gas that we get in our houses. For MGL, it's around 80%. For Gujarat Gas, this is really small, around 38%. So they procure domestic gas to actually give the final output in terms of CNG and PNG gas as well. So now retail prices for CNG after this cut, if it actually comes through, could be cut by 7.5 to 8 rupees per kg. In the PNG segment, it could be cut by 4.9 to 5 rupees per SCM. These companies can decide to cut prices and increase their volumes, and they can also decide not to cut the prices. That will improve their margins. In both the cases, it is a win-win for these companies. The second thing is that for some of these new fields, pricing has not been changed. It is still market determined as per the conversation that we had. This will be positive for the likes of Reliance Industries, which has a lot of new companies or new fields coming up, and ONGC as well. So it is a positive for those companies as well. So yes, it's a win-win for city gas distribution companies and for the new fields, the likes of Reliance Industries and ONGC.
Sonal, many thanks. Now, India's GDP growth data for the second quarter will be released at 5:30 p.m. today. A CNBC-TV18 poll expects growth to slow down to about 6.4% compared to 8.4% growth in the same period last year. In the first quarter of this financial year, the economy grew at more than 13%, but that was largely due to the base effect since first quarter of FY22 saw the deadly second wave of the COVID-19 pandemic. Lata will be joined by a panel of economists and experts to decode the GDP data at 5:30 p.m. right here on CNBC-TV18. Now, the government is hoping to bring the fiscal deficit closer to 6% instead of 6.4%. Sources say strong revenue and expenditure management can keep the deficit in check. But the Finance Ministry has also reiterated the need to end the free food grain subsidy, which was extended to the end of the year. Sapna joins us now with more. Sapna, yesterday the Revenue Secretary Tarun Bajaj, speaking to us, said very clearly that the government was confident of being able to get to 6.4%, but the hope now is to do better than that.
Well, the government is hoping to bring the fiscal deficit aim of the current financial year closer to 6%. And this probably stems from their confidence in terms of ramping up tax revenues further, the collections from taxes, as also better expenditure management. There is also the question about the free food grain scheme, PMGKAY. Probably there could be a reiteration from the Finance Ministry side that there should be a sunset to the scheme. The scheme as of now stands extended towards December. There is also a view in the government that probably the worst is over in terms of fertilizer and food subsidies primarily due to PMGKAY. If that's the case, then probably next year you should be seeing lower subsidy targets for each of the items that we are talking about. Bringing the fiscal deficit closer to 6% in the current year will make the, it will make the fiscal glide path more achievable for the government. Of course, the aim is to reduce fiscal deficit annually over the next 3 years by 60 to 70 basis points. And as the finance minister has said very clearly, the intent is to bring the FD below 4.5% by FY26.
Sapna, many thanks. On to another CNBC-TV18 exclusive report. After recent fires in electric vehicles, the Department of Heavy Industries has slowed down disbursements to EV manufacturers and even put some subsidies on hold. This is also in response to a high number of complaints regarding the violation of localization criteria and quality norms. The government is also considering asking certain EV players to return the subsidy claim, though a final decision on that has not been taken yet. Parikshit joins us now with more details. Parikshit, what is the subsidy amount that currently the government is holding back, and what can we now expect from here on?
Well, after probes into the localization criteria, into the quality control norms of different EV makers availing the famed subsidy, we believe that subsidies to the tune of 500 to 600 crores have been put on hold right now. What the government is doing, they are carrying out probes and audits of all EV manufacturers. So you've got teams from the ARAI and the ICAT which are visiting the shop floor of different companies, and they are studying their localization norms, their supply chain data, and also quality control norms. There have been a lot of whistleblower complaints that the government, that the DHI has been receiving for the last 6 to 8 months. So wherever there is a complaint, the subsidy for that particular company is withheld for some time, and once the doubt is cleared, the subsidy is sent to the company. But there are some violations that the government has come across, and we believe for companies like Okinawa, Hero Electric, Ampere, Victory, Tukral Electric, subsidies have been put on hold for now. For others, it is being slowed down. In some cases, it is stopped for a month or so and then disbursed. So this process will continue because the government believes we need greater scrutiny as the EV sales have risen exponentially as well. There is also a question of how sustainable these subsidies are in future, and we believe that there is a thinking in the government that subsidies should only continue for commercial vehicle manufacturers and not two-wheelers.
All right, Parikshit, this is going to be important to track, but of course, more developments expected. Parikshit, there's another story that you're tracking, so let's fill our viewers in on that as well. We understand that the Enforcement Directorate is probing Ashok Leyland for the alleged sale of BS3 vehicles in defiance of the Supreme Court's 2017 order, which had banned the sale of such vehicles. Parikshit, Ashok Leyland responding, saying that they're not in any kind of violation. Take us through where this stands.
Well, the Enforcement Directorate is carrying out an investigation into certain purchases made by companies which are linked to a former TDP MLA. Now, properties worth 22 crores have been attached. According to the ED press release, the crime proceeds are to the tune of 36 or 37 crores. What they say is that Ashok Leyland sold these BS3 vehicles to companies owned by this former TDP MLA in violation of Supreme Court norms. Supreme Court in 2017 had said that you cannot sell BS3 vehicles beyond a certain cutoff date. And these vehicles were fraudulently registered as BS4 vehicles. At the same time, the release makes it clear that they have got fake invoices from the RTO which show that these vehicles were registered at BS4, and they've got genuine invoices showing that Ashok Leyland had sold these vehicles as scrap. Now, Ashok Leyland in a statement to us said that there is no criminality on their part. They are open to any kind of probe, and this probe is an old one, and these vehicles were never sold fraudulently by Ashok Leyland.
Many thanks for joining us. That, of course, is a developing story. On to another exclusive this evening. Sources tell CNBC-TV18 the central government has asked all probe agencies, including the ED, CBI and the IT department, to ramp up action against the growing cyber threat that's arising on account of large digital exposure. Timsy joins us now with more. Timsy, what are the efforts being taken by the government to prevent cyber attacks?
Well, that's right. What sources are indicating to CNBC-TV18 that the top government has asked all the investigative agencies to ramp up against the growing threat and challenges via digital exposure. Investigative agencies have been asked to look into areas to develop expertise to prepare and protect hawala transactions, cyber attacks, hacking, and also to bust nexus or web of online companies. Apart from this, they've been told that if need be, please hire more staff to probe areas such as online gaming, betting, online financial transactions, misuse of wallets and crypto economy. They've also been alerted by the top government that now legitimate businesses are getting involved in illegal fund exchange and transfers, and that is something that needs to be broken. Also, they've been asked to keep a close watch on the new age economic challenges arising out of too many online transactions, because the base of online transactions has increased drastically since demonetization, and that is back on government's radar. Agencies such as ED, CBI, ITMCA, ROC, DGGI, DRI, FIU, IB, CBI, RBI, SEBI, and GST wings have been alerted. So let's see how soon the crackdown or the action begins. Back to you.
All right, Timsy, many thanks. The big newsmaker this evening, John Pearson, the global CEO of logistics giant DHL Express, is upbeat about India and its growth prospects. Speaking exclusively to CNBC-TV18, Pearson said India, Vietnam, Philippines and Thailand are emerging as strong backups for those diversifying their supply chains out of China. However, he also cautioned against overestimating the shift out of China. Take a look.
India, Vietnam, Philippines, Thailand, some of these countries are strong beneficiaries of a more flexible and backup-oriented supply chain setup, as opposed to just depending on China. So that is happening, and we can see our volume growth out of those markets as extremely strong. Whichever industry vertical you look at, and whichever size of customer, global, multinational, national, what we call field sales, telesales, or even micro, I've had all sorts of data put in front of me that shows the growth of all the channels, from small customers to large customers and global customers, and all the industries are really, really growing very strongly.
And you can catch that entire conversation with John Pearson, the global CEO of logistics giant DHL Express, at 7 p.m. right here on CNBC-TV18 on the Global Dialogue. We're going to head into a break, but up next, the aviation space is buzzing after Singapore Airlines and the Tata Group announced the merger of their joint venture Vistara with Air India. What could be the rationale behind the merger? A special report when we return.